What up, Ashley? Ashley, is there a link of that AMA on YouTube? Anonymous finally just bought an option, first time ever. Congrats. May it make you lots of money. We'll all keep our fingers crossed for you. Gambler in the house, people. What up, JT Bills? Sweet. I'll look it up, Ashley. That's all I need to know. Nope, I don't need the link, Ashley. That's all I needed. That'll work. What up, Charlie? What up, Brothers Life? 10 more options on June 18th. Let's go. EOB. So the purpose of this video, everybody, is to basically help you understand that I'm done giving out like my detailed positions, etc. Like if I make an update, I'll go ahead and like say it to everybody, but I'm not gonna go and like constantly show my account, because some people are trying to just come in and be like, show me your portfolio, bet on the same thing, and then come and try and blame me when they lose. So I'm done showing my account balance. Even if I get more money, I probably won't. If it's $1 million and I'm investing $1 million, maybe I will, just because it means I must have had a big win somewhere. But unless I got big money, I ain't showing nothing on my screens no more. And I'm not really caring to answer. Obviously, I don't answer questions about other stocks, but I'm really over answering questions about AMC and GME also. You guys know how I feel about the trampolines. You guys know how I feel about the bottom dollar. We just found out that they can clearly fuck with the trampoline bounce, and there is some limits of how high the bounce can go. And so, like, each person's got to do with that on their own. Like, I don't have an answer for that. No one has an answer for that. And that's where everyone's got to choose for themselves what they think is right. And if you feel like you don't know enough, well, then you just haven't watched enough of my videos. And again, the blame falls on you, not on me. I have given the information anyone would need to be able to understand what to do in a moment like this, whether they are selling options, whether they are buying options, whether they are trying to just calculate pricing or profits. All the information I have given away. So, with that said, I will tell you that right now, like, no one knows about the timing, not even me. And so I like to look for stupid numerology BS signs of reasons as to why I might get paid. This last bet that I made was a DFV double down, which he ended up doing. Like, my bet was based off the fact that he was going to exercise his 500 options and then buy 50,000 more stocks and have 30 million of stocks. And I thought if he did that, there'd be 100 million of volume the next 3 days or whatever. Instead, we had record low volume 3 days the next week. Record low volume in the last 6 months. And so I read it wrong. I thought retail had some more money. Retail's tapped out. That's basically where I feel AMC and GME is that the diamond handers, the prices can't go lower, but there is not much more money coming in to help us. And so until somebody can find a way around bringing in more volume to get what we want, then we aren't going to win. Unless you go watch my freaking playlist that says sell stocks by options, and enough AMC people do that, and the short interest goes above 100%, then you would also see another victory. Other than that, anything GME and AMC, like, I'm really done talking about. You guys all know what I know. I don't know anything you guys don't know at this point. If there's new information, then we'll all go over it together. And then, yeah. That's where my head's at, guys. So this video, like if anyone ever asks me GME and AMC, I'm going to send it back to here. So if there's any final questions about GME or AMC, now's the time to ask it. Now's the time. Alright, well let's go find this AMA. Super stunk. Here we go. Here we go! What?
But first,
man, I used to watch so much Andrew Mo Money.
10:35 today.
I'll probably learned a decent amount too. Like I didn't know crap about stocks, honestly.
See for his.
There's probably a little bit that I learned from him. Oh, there we go.
Like rule change, people can answer a lot of do from an early age, and I wanted to study money, basically, and how money works. So I've worked with insurance companies, the reserve banks, stock exchanges, clearing and settlement. That's been my career through the time I went to grad school. 1994 is when I left the Western Trust Company in New York, and did my PhD in economics at New York University, and then went to the Milken Institute where I did capital markets research for a couple of years before going out on my own. I've been doing independent research in finance and economics since 2003. Yeah. So
Godpill, how can I help you?
Godpill, what up? This is JT Bills.
What up,
Hey,
man?
man. I had a question, and you know, my brain is smooth as shit, and I just can't quite get it. But you know, obviously we've had low volume. People have speculated. People are, you know, diamond handing that they're just not, you know, people aren't relinquishing their shares. So my main question is, let's say, you know, for example, like some random big long whale wants to come in and buy 1 million shares. Would he even be able to do that? Would the shares be available to generate the volume to lift the price?
Yes, because here's the thing: if he comes in to buy and all the shares dry up, and the market makers don't put more shares on the market, then the price has no choice but to go straight up.
Oh, okay, I got it.
So they have to put more shares on the market, and the higher the price they put the shares, and the more it gets bought, then the higher the price is going to keep going.
That makes sense. All right, thank you so much, man.
Yep.
Love the show. Have a
You're
great
welcome,
day.
brother. All right, bye.
I do want to say that I probably forgotten more than most people will ever know about back office operations and all the post-trade stuff, so post-clearing settlement. I also worked in Russia on a foreign aid project to help them build trade clearing settlement systems when they shifted from communism to capitalism. My expertise is post-trade, not trading, or trading operations. So post-trade is really my gig, and there are other people who can answer a lot of questions about, you know, hedge funds, stock pools, trading strategies, that kind of thing. That's not really what I know most about. So I mean, I took, you know, an investment class in college, so I know enough about it. But really, everything that happens backstage at Wall Street, that's really where my expertise lies.
And that's what's so important and incredible about having you on here, because a lot of people are just trying to figure out, look inside the DTC. We've been talking, we've been posting about, hey, this stuff is going on, but having you here to actually help us explain that, and to really dive into kind of a follow-up. I wrote this post about a week ago called The House of Cards, which you have generously spent time reviewing, as well as everything short. And a lot of people want to know, just high level, how close.
How old is this guy? He looks younger than me.
How closely related were we? Are we trying to show the same message?
Yeah, so the House of Cards is a lot more what I know. Everything short, there's a lot of stuff in there that's really not in my wheelhouse.
Godpill, how can I help you?
Hey, it's Ashley. Use the real stream from Superstar. Don't use Andrews.
All right, hold on. Let me make sure I find it. Oh, here it is. I see what you're talking about. Yep, I got it. Good call.
Thank you.
Thank you.
Bye.
Bye.
Build trade clearing settlement systems when they shifted from communism to capitalism. My expertise is post-trade, not trading, or trading operations. So post-trade is really my gig, and there are other people who can answer a lot of questions about, you know, hedge funds, stock pools, trading strategies, that kind of thing. That's not really what I know most about. So I mean, I took, you know, an investment class in college, so I know enough about it. But really, everything that happens backstage at Wall Street, that's really where my expertise lies.
And that's what's so important and incredible about having you on here, because a lot of people are just trying to figure out, look inside the DTC. We've been talking, we've been posting about, hey, this stuff is going on, but having you here to actually help us explain that, and to really dive into kind of a follow-up. I wrote this post about a week ago called The House of Cards, which you have generously spent time reviewing, as well as everything short. And a lot of people want to know, just high level, how close were we? How closely related were we? Are we trying to show the same message?
Yeah, so the House of Cards is a lot more what I know. Everything short, there's a lot of stuff in there that's really not in my wheelhouse. So I often do some comments on that, but I don't think I can be as helpful there. On the House of Cards, yeah, I think like there were some things that you caught on to about like rule changes at DTC about not allowing issuers to say I don't want to be in the depository. Like the most this
That's awesome. I can't wait to sue for this.
that because that that really came about as a result of one issuer telling their shareholders to pull their certificates out of the system. So rather than leaving their shares in the street name at the broker, to get them registered in their own names. And that was, it had been done on a small scale before, but for this issuer, a lot of people were organized, a lot of the investors were organized, and they really, pretty much everything came out.
Squeeze.
And that was the point where DTC said issuers can't request this. Now, an individual can still ask to have their shares registered in their own name, right? So, GameStop has a direct registration, a direct stock purchase program, where you can, in fact, just buy your shares from them. I think the minimum purchase is $25 for a one-time buy. But so you can still do it. But that finding that in-house cards really showed me that you've done a lot of background research, and I come up with some of the things that a lot of people miss. There were a few problems in there. The big one for me is, think CD & Co is a company. Right? So CD & Co is what you call is a nominee name, and you should think trustee, custodian. So when anyone, and all of the banks and brokers have a nominee name that they use for securities registration, any shares that are registered with a nominee name, that signals the issuer that these are not held for that company, that they're actually held for someone else, right? And bit of trivia, CD & Co, CE, your shares from them. I think the minimum purchase is $25 for a one-time.
So we got a smart person talking, people. Even I was starting to... Oh, hold on. What happened to my camera? Is there something wrong with my camera? Has my camera been down the whole time, people? What the frick? Let me fix it. Hang on. I don't know why my thing does that. Sometimes I just gotta delete my... Oh, that was the wrong thing. Damn it. Display capture. Add source. Okay, done. Okay. Then I need to do a video capture. Remove. Okay. Add. Video capture. Add. There we go. Okay. Alright, let's catch up on the chat real quick. Alrighty.
But so you can still do it, but that finding that in-house cards really showed me that you've done a lot of background research, and I come up with some of the things that a lot of people miss. There were a few problems in there. The big one for me is think CD & Co is a company. Right? So CD & Co is what you call is a nominee name, and you should think trustee, custodian. So when anyone, and all of the banks and brokers have a nominee name that they use for securities registration, any shares that are registered in a nominee name, that signals the issuer that these are not held for that company, that they're actually held for someone else, right? And bit of trivia, CD & Co, CEDE, that was actually C, the letter C, D, Central Depository. They started out as a department at the New York Stock Exchange, and when they needed to get a nominee name to hold securities for trade settlement, they used CD & Co.
Interesting. Thank you for clearing that up. Thank you for the compliment, and thank you for clearing that up. Yes, so that was a definitely a big thing. I was hearing a couple of people talk about maybe it was certificate depository, but kind of coming from gospel there. So I'm going to take you on use the credible source on that. That's interesting. That's good to know.
It's central because that's where all of the New York Stock Exchange members could deposit shares there, certificates there, and they would hold it for them so they could use it for settlement. Because in the 60s, there was this paperwork crisis on Wall Street where there was simply could not get shares transferred, re-registered from one name to the next when you sold securities in time for 2-week settlement cycle. So imagine as you're trying to go to T+5, T+3, T+2, how difficult it became.
Yeah. I know you've drilled in a couple of really, really big points in your book about your personal opinion, your personal feedback on some T+10 settlements. But let's go ahead and get into, we've got a jam-packed hour here, folks. We are trying to cover big course level, big college course level stuff, and the entirety of her book is almost a 350-page book. We're trying to condense that down. So what I want us to start doing is,
Want to see what the book is called in a little preface? Naked, Short, and Greedy. What a great title of a book. Holy shit. That's awesome. I like this lady already. That's awesome.
So what we're trying to say here is that there are these shares that are just kind of floating around, being borrowed and being lent again, and it creates this problem, as we will get into, where there's just no really nobody knows exactly what is going on or who owns what. We just know that there are more shares out there than the company had originally issued. So I'd like to go through and kind of walk through a typical example for someone. We have to also keep in mind that there are a lot of people that don't understand the words or the terminology that we're throwing out, so we really want to drive that home. Let's take one example and talk about where in a perfect world, how would a short sale or a naked short sale be actually held in account and kept accountable? How would that go in a perfect world?
So in a perfect world, there would be no naked short sale, period. That's really an exception. That's, market makers. There are, in most underwriting agreements, there's a little clause that the issuer agrees that the underwriter and the remarketing agents can, in fact, that sometimes sell more shares than they actually have in order to keep the market flowing, right, to meet the demand. Aside from that, in a perfect world, there would not be. In fact, if I were an issuer, I wouldn't agree to that. But in a typical short sale, the retail customer puts in an order to short sell the stock. The broker finds somewhere to borrow it so they can make delivery. They either pre-borrow or borrow at least within 2 days of executing the trade. And the borrowed shares are then delivered to the buyer, who then gets all the rights and entitlements to dividends and voting rights.
Yes, so yeah, so we're going to drill onto that too. So the rights are actually being transferred along with the share that's being borrowed, and that share may be borrowed multiple times, correct?
It can. It's not supposed to be, but it certainly can be. There's no. It's really because the buyer often doesn't know that they're getting a borrowed share, right? There was a time in the 70s when friends of mine with broker experience told me that they would not accept borrowed shares at settlement because of the chance that share was actually they were borrowing a borrowed share, right? So they would not be the buyer, and basically wouldn't be the buyer in a short sale, and that required, of course, and this I think starts to get into in the not so perfect world.
Yeah, the perfect segue as you feel free. Yeah. In
the not so perfect world, the short seller, even one who borrows, may or may not mark the trade. Say mark the trade, that's old school. You actually used to have a piece of paper and you would write short on that piece of paper and say, I'm short selling 100 shares of something or other.
Are these the short sale indicators that we're seeing on FINRA reports, failure to mark a short sale indicator? Okay.
Yes, it used to be they actually wrote it on a piece of paper, but now it's all electronic, so there's something in there. So if the short seller knew that buyers would not accept borrowed shares, they might in fact just forget to mark it short, right? Mm-hmm. So that there's no record of a short sale anywhere, not at the exchange level, and certainly not. There's no indication to the buyer that they're going to be receiving borrowed shares. So that's one problem. Just not marking the short sales.
Really quick there, so I can understand. So that is in essence a way for them to say, okay, the system wouldn't typically allow for someone to take a share that was marked as short or marked as borrowed, and by excluding that, it doesn't give the indicator that there's a difference between a long sale or a short sale, so it allows it to go through with the system.
Right, the buyer is the one who wouldn't allow it. So it's not that the system wouldn't allow a share to be sold.
But the buyer doesn't know the difference.
The buyer doesn't know the difference, but at the brokerage level, right, broker to broker, they know when they put that trade together, the short seller knows he's selling short. Right, and then if they don't turn on the indicator, that's where the rules violations come in, especially post-reg show, right, in the 2004 period, that became a major issue because the number of shares circulating was so much greater than the short sales, right? So that's one problem that occurs. The other one is that you mark the sell short, and
so what we've learned so far is that she thinks naked short selling is an unnatural practice. And she's basically saying it was invented to hold the market down and to basically screw out anyone that ever tries to invest in the market against the status quo, right? If you try to bet against society, you'll never win because the naked short selling guarantees that they're going to get what they want. Obviously, they're not accounting for the inflation effect yet or the tax effect yet and all these, like the capital gains tax going up to 40% and all the other things. But there's going to be lots and lots of things like ramifications from that. She said that the borrowed shares, that they're intentionally not marking them through the electronic requirements. Like she said, sometimes she's sure they do, but she says she's sure they don't all the time. So you may as well assume that 99% of the time they aren't marking it if they don't have to, or if nobody's forcing them to. So that's a easy thing to add to a lawsuit. I love hearing shit like that.
And you pinky promise that you're gonna say you're gonna deliver the shares, but then you forgot to borrow them, didn't borrow them, thought you could get them, but then you couldn't get them, and maybe someone promised that they would lend them to you, and then at the last minute they go, oh no, I can't lend them. So there would be, so that's another problem that occurs, right? That
Sure.
even if you market short, you may or may not be able to get the borrowed shares to deliver.
So on that point, I think that's a great way to segue into, you spend a lot of time in your book talking about Patrick Byrne and overstock. I think it speaks volumes to, you were using words, I think you were being very generous in saying accidentally or may not have, left out something that we should have covered, but oh, sorry, we forgot. Would you go and give an overview of what happened with Patrick and overstock?
That's really interesting. Patrick was very active. He's this crusader and a self-declared crusader against naked short selling. So there's a group called the North American.
So we need to start, when I start the lawsuit against the DTC and the Fed and everybody, we just got to create a massive list of all these people. This video is valuable. Adabit's research is invaluable. There's so many lists of people that we can subpoena, request to come and testify, people that are good on our side, people that are bad against us, so many people. This lawsuit is never ending. It's the most beautiful thing ever.
Administrators. So every state has a securities administrator, someone who takes care of the rules inside their own organization. I'll find anyway, I'll probably get some dates wrong and some names wrong. But
that's fine.
So this whole thing was coming up, and companies and investors were complaining to their state at the state level because they weren't getting action from the SEC. They're complaining about this naked short selling and stock loan and all that. So they called a panel discussion in Washington D.C. at the end of 2005, and I was one of the people that was on the panel. And I knew in the audience that there were investors and CEOs of companies. I did not know Patrick at that time, but I knew that people like him were in the audience. I stunned them by presenting a report from the Securities Transfer Association that indicated that of the 285 proxy vote is the corporate annual meeting votes of the shareholders, that of 285 cases examined, all 285 had overvotes. Overvotes mean that they got more votes in than they had shares out.
Are you freaking kidding me? We can't vote normal in a freaking country in an election for a president, and we can't vote normal in a freaking capitalism? Capitalism's supposed to be better than the government. Oh, that breaks my fucking heart to hear. They're getting more votes than they have available shares, and they're not fucking fixing the problem.
Standing, right?
That's incredible.
It's retarded.
Large amounts, right?
Yeah.
100%. Now, just to be clear, the problem's a little better now. I think last year it was only 85% of the test cases had overvoting, but it's far from fixed. So when
my
really
goodness.
I put out a challenge to all of the CEOs in the audience. I told them, I said, when you go back to your office, buy 10,000 shares of your own company, and at that time it was T+3. 3 days later, the broker's going to take the money out of your account, and he's going to say that you got your shares. Ask them if they really got the shares. Now, if you or I went to a broker and asked that question, they go, oh, yes, I see it right here. It's in your account. But
Sure.
when you have the purchasing power of a corporate CEO, you have a tighter connection where they're going to really dig into it to make sure.
They have to make sure if you're a CEO, because if they get that wrong and the CEO doesn't have their shares, they can sue the brokerage for so much money. If it came to a power struggle.
And he took him, so finally, eventually, his broker at the firm,
Yes.
told them that, in fact, they did not get the shares. And that multiple attempts to purchase the shares to replace what he didn't get had also failed. That there simply were no shares available to meet his purchase. Now, they definitely,
Yet there are sell walls of hundreds of thousands of shares, even though there's no shares available. Obviously, she's talking about a different stock. But I'm just, you know what I'm saying? They've got these giant sell walls, and we know that it's all fake stock. And when you go and ask for real stock, they can't even find it for you. It's so gross.
In dollars worth of shares.
They took his money, and
Yeah.
they had to keep his money, but they knew that they didn't have the shares for him. It took him 2 months. 2 months. And he's the CEO of the
2 months for them to cover?
Exactly.
2 months for the cover for a CEO? Woo!
That's pretty scary.
It's very scary. So
The greatest squeeze of all time in a real world. They're freaking cheating us.
The name of his broker, but he shared with me and gave me permission to use that publicly because I think it's a prime example of just how,
Goodness.
as a retail investor, you're dealing with a retail broker, and that retail broker does not know backstage, right? They know what's on the records in front of them, and they don't know what's backstage. So that was really, that caught a lot of attention. And Bob Drummond from Bloomberg Magazine and Bloomberg Markets Magazine in 2005 did a multi-page article called the proxy voting charade.
The ultimate Mama 8. Look at this comment. I love it.
And being hit in the face with
The
this
ultimate
idea that,
Mama 8.
there were simply people are voting shares, right? They're voting in annual meetings. They're voting in matters of corporate governance, which are so important. And yet their votes are not counted because there's too many votes coming in.
Exactly. And we're actually dealing with that right now with GameStop. We are dealing with the proxy voting with GameStop. And kind of tying that back in there, we did have a volume chart. I know that a lot of people that have been following GameStop know this as well. You and I talked briefly about this before, but when we got into the peak here before the run-up in January, we were having upwards of 180 million shares a day for GameStop being traded. 197 was the peak there, 197 million. We're talking about circulating the same stock 4 times.
And one day, their entire capital, so that number of shares outstanding, that's their capital statement, right? That's on their balance sheet. That's what they report to the Secretary of State in the state where they're incorporated about what their capitalization is like. And in one day, it's crazy, right?
It's incredible, and that kind of is a really good point. I know just a couple of other points there on top of that. That wasn't the only lawsuit that we were talking about here as well. We had, so in addition to Patrick, we had in 2006 there were lawsuits filed against 11 prime brokers for allegedly doing the same exact thing, and they were conspiring to do this, basically according to your book. Let's talk about that.
Right, and that was the Electronic Trading Group, ETG, filed the lawsuit. I believe it was settled out of court. I don't think that there's any public information about the resolution, but. And
this is just another example.
It's a really important point, though, because we want to talk about 65 million shares that the company issued, and 180 or 210 million shares.
Almost 200 million.
Right? So this was ETG's complaint was that their financial model for shorting a particular stock included the fact that the shares were borrowed and would eventually have to close the short and replace them. Yes. And if the brokers were shorting the stock, their prime brokers, right, the guys that they're a fund, they're getting their orders, their trade orders to some group, and that group is not borrowing the shares to deliver, then that ruins their financial model.
Can you segue from this into the triumvirate of trouble? Because I feel like that's kind of what you're touching on here. So
right.
It's not.
Hang on, I want to hear
and
that
if
again.
The brokers were short.
This is just another example.
It's a really important point, though, because we want to talk about 65 million shares that the company issued, and 180 or 210 million shares.
Almost 200 million.
Right? So this was ETG's complaint was that their financial model for shorting a particular stock included the fact that the shares were borrowed and would eventually have to close the short and replace them. Yes. And if the brokers were shorting the stock, their prime brokers, right, the guys that they're a fund, they're getting their orders, their trade orders to some group, and that group is not borrowing the shares to deliver, then that ruins their financial model.
Can you segue from this into the triumvirate of trouble? Because I feel like that's kind of what you're touching on here. So right. It's not just the naked short selling, but we have these other additional factors. You care to elaborate on that?
Sure. So the triumvirate of trouble. I've got I used to do slideshows down in New York to try to explain this to people. And the triumvirate of trouble is shorts, fails, and loans. Shorts, naked or otherwise. Even a short that's covered by a borrowed share will in fact increase the number of shares in circulation. So while that share is out on loan, there are actually 2 people one person who really owns it and one person who kind of owns it, like they have a marker, and then eventually the shares will be delivered back to them and they'll have their ownership, right? So even a short that's covered by a loan is a problem. And then when you throw in fails to deliver, which means that long or short, you just don't show up at settlement with shares. All of those add to this increase in what is the denominator, and I don't want to get too
long or short,
but I know there's some very highly educated and technical persons in your audience. So the denominator in the financial ratios is shares outstanding. 1/2 is bigger than 1/3. So as you increase that denominator, you decrease the values, right? So it just throws all those financial ratios out the window.
Yeah, and then are there any? We know in your book you do a good job of explaining this, but just high level, what are the incentives for these companies to fail to deliver instead of just covering their shorts like they're supposed to?
It doesn't even sound like they know they're failing to deliver. If the people buying long are also failing to deliver, then it's just that it's the whole same problem that everything's a borrowed share. It's a borrowed share on both sides of the equation.
Type question, but I will say this:
this is retarded.
Recently, there was no penalty for failing to deliver. We can talk about this, in more detail.
No penalty. Of course not. They can't.
Recently, the NSCC and others have started to put in penalties. There's a flat fee penalty. There's
How can you have a penalty for an FTD when they don't even know it's a borrowed share? You said they just said Robinhood, E-Trade, Ameritrade. None of them know if it's a borrowed share. They said the retail brokers don't even know who's getting feed.
It's a per dollar value penalty. There's a VIG, like an interest that's charged per day not delivered, right? So they're starting to put those in, and so there was a paper done in the early 2000s by a researcher at the SEC. That talked about.
You guys understand, unless this goes to court, unless court is won, unless precedent is set, and you guys rely on freaking government politicians to fix these problems for you, one step at a bloody time, you'll be saved in 1,000 years. But if you do it in court, it all gets rewritten in a second if you win.
Strategic fails to deliver. That in fact it's a strategy whereby I take your money and I give you nothing. I pay a little fee to the, whoever I failed to deliver to. I give them a little cash, right? Yeah, fine, whatever it is. In the meantime, I have your money. So for 2 months, Patrick Burns' broker had use of his $10 million. I forget what the number was, but $10 million that they could invest overnight. They could buy other stocks. Right? So
yeah, they've got the money now. They're in control.
So to me, that's incentive enough. If there's no punishment other than a slap on the wrist, then no one's going to come out and break your kneecaps because you didn't pay back the
They
share.
should though.
Right? Yeah. You just get this little fine, and for most of them, they're able to earn enough on your when they have your cash that it's worthwhile.
Wow. So you mentioned the DTC.
Gross.
I would want to kind of segue from there into the oversight and competence and the involvement section. So what did the DTC do when they would receive these complaints? So they would, can you kind of walk through how that management info system kept track of these issues?
Right, so I worked in troubleshooting at DTC, and troubleshooting, we dealt with all the operational, everything that didn't balance in operations. We send something to a transfer agent to have it re-registered in CD and Co's name from Merrill Lynch or whatever, and it's a month later and it hasn't come back yet. So that item appears on the list for the supervisors in the morning. There's similar activity in the vault, for example. They get a break list. Every morning it says, this is what is on the shelf, and this is what we're supposed to have. Right? This is what the system says is on the shelf. This is what we're supposed to have. Figure out why it's different. Settlement gets one that says, these shares were supposed to come in and they didn't. The only one that doesn't get that list is money, because on the money side, if you don't deliver your money by 4 o'clock, someone's on the phone calling you to get your money. So that's a whole different thing. We're just talking about those shares. So those lists, and I know from my work in troubleshooting, those lists are sorted by value, right? So we have an aged fails, aged transfers, whatever it is. They always come out by value, and you always hit the big value items first. So what in Song Q2, and I talked about this as well, as the brokers continue to short or naked short the stock, they do that. They continue selling more than buying to push the price down. As they push the price down, you can in fact keep dropping that item further down the list, the priority list for investigation at the DTCC, because now it has a lower value, right?
You're intentionally lowering and reducing the priority of the stock. In order to
and I think this question came up, a related question came up in the AMA that I read. I can't remember who it was from, but could the company, like, what happens when the company goes out, right? So if the end game in naked shorting is that you deny the issuer access to capital by pushing down the stock price. So the way that they raise capital is they come out and issue new stock, so you're getting bigger and bigger shares of equity for less and less money. Right?
Right. Okay.
Right, so if your stock price is up, that's when you want to issue more equity.
So why is our CEO and AMC not defending our stock?
Right now too, with the market price is high, good time to make some cash, right?
That's the time to do it, because if they need capital, if they want to raise capital, that's the way to do it. By pushing the stock price down, they are denying the issuer access to capital. The capital is really important. I mean, if you don't have money to expand your business, buy new equipment, do capital purchases.
Exactly.
Eventually, they can drive the company out of business. Once they do that, then all of the failed, shorts, loans, everything is erased because the stock is declared worthless.
Right.
Technically, it's declared worthless after, if you can't get a share transferred, re-registered from one name to another for 2 years, then DTCC can declare the stock worthless, and at that point, they just archive the records and shred the certificates. So at that point, and that was one of the questions that came up in the AMA, is that, and it's directly related to this, like, there's so much damage done, not just to the investors, of course, the investors suffer.
7,500 companies, about 7,500 companies or something have been put in a coffin because of stuff like this.
It's hard to say. I
just remember something similar to that in the book, and it's mind blowing that this is that systematic.
Yeah,
That's what I'm really trying to say.
It's mind-blowing that no one knew. It's mind-blowing that we've all been in this for 3 months, and it's like, I don't know. It's not common knowledge to anybody, I don't feel like. I mean, it's obviously about to be. It is now. Like, it is now for sure.
there are companies that, you know...
If you don't know about this shit by now, then you're not trying, right? You're an NPC.
It started and fell and go out of business. I mean, that does happen. So they had to have a procedure to do this. But the idea of, like, but it's just very official. It's like 2 years, can't make a transfer, they're worthless. The broker deletes your position. They shred the certificates, and then that's the end game. That's the end game for the asset grab in particular.
Yeah, I mean, it's just that story to me, especially about the having the option is in audit, and you're all about these internal controls where you're saying, where do you have this incentive, where do you have the opportunity to maybe cheat the system, and that was just, man, that is a red flag. That is on top of some of these other points that you talked about. We can hit these real quick. In 2008, the banks that were the source of these failures to deliver began to see their own shares fail to deliver. And so to protect them, the SEC stepped in and stopped short sales against the securities, but just the securities of those banks.
Exactly. And that was the false Lehman Brothers went to Congress and said, help me, they're naked shorting my company now, but they're the perpetrators. And
it sounds too familiar. It sounds too familiar to what just happened with Robinhood and GameStop not too long ago.
Well, and then on the sort of the other side of that coin is that and I need to mention this, in Europe and Asia, when they tried to stop naked short selling, they stopped it in all the stocks. It wasn't just the banks. In the U.S., they only protected the banks, which I think is, again, I mean, that's a really big red flag. Why were we protecting the banks when, in fact, the banks are the ones who are doing most of it?
And so
white-collar crime's the worst crime.
DTC, like people that are behind the scenes and outside of this, we have this impression that, like, these people are being parented. Mom and dad are making sure the kids aren't breaking the law. But when they would come and they would talk with you initially, generally the first question out of their mouth was what?
What does DTC do?
What does the DTC even do? And when you mention another point in here that said it's easier to pass a FINRA exam in order to become a broker or to be someone that was licensed to buy and sell stock, it's easier to to pass that FINRA exam than it is to get your barber's license.
In most states, yeah.
That didn't surprise me. It's just
money.
money. To start a bank, I called my state in Arizona. I said, what do I need to start a bank? They said, the average person to get qualified, about $30 million in a board of directors of 12 people that got a good resume, historical resume that shows that they're responsible, competent adults. Just money and people. That's it. Zero education, people.
On that. It's not that difficult.
Like, maybe somebody's got to be qualified to actually, like, be able to do, like, make sure the business can run, for sure. But, like, I'm just saying, not zero education, but, like, you just got to find them. Like, they can be employees, Like, it's just wild. It's wild. It takes very little to start any of this stuff, as long as you got the money.
People will get hired and trained on the job while they're passing their Series 7 license. So it's not... Look, they just have to know some fundamentals. That's why you have things like the certified financial analyst, right? CFAs.
CFAs, yeah.
Right, because that's an additional designation beyond I understand the mechanics of stock trading. I understand something about financial analysis behind it.
And to that point, you were, I think you said like 73% or 73% of the exam was basically them telling people which stocks to invest in, as opposed to just like what the process of this is. It was basically like advising almost in that FINRA exam.
That FINRA exam, there's, if you can Google that up, you can see some of the questions, you can see sample questions. It's pretty accessible.
Unreal. So to kind of group this in, so I feel like it's a good time to talk because people are probably wondering why I'm not asking direct questions. So what we've done is we've taken a list of questions that were pertinent to this conversation, and I've gone through and grouped them into about 20 questions that were grouped on based like failed to deliver or regulation or compliance and oversight. And so as we have this conversation, I'm trickling those questions in, and then afterward when we post the follow-up, which should be posted after this, we have mods on the back end of this actually taking live notes while we're writing. Those people will be able to see the questions and they will get the shout out there. But we had a lot of questions on this with the regulation. I think a lot of people don't know that these people are SROs, this self-regulatory organization, and they don't
for profit.
Sarbanes-Oxley don't fall under the realm of Dodd-Frank and some other regulatory
for profit
acts. So it's just overwhelming the stuff that you put in your book to directly address this, not only like the triumvirate of trouble, but then how this is allowed to be pervasive, and the system actually allows these people to fail to deliver, which is something that we have to start, as you mentioned, raising the pitchforks about. This has to be brought out.
Only way to finish it is a lawsuit.
Yeah, your pitchfork moment, bonfire the man. You just got to find that point where you're going to say, okay, enough is enough, and I really need to stand up and do something. There was a question from I just need to go back just a second.
This is your call. Go for it.
It looks like, so, like, I don't really speak emoji, and I actually called you Autobit, right? Instead of
Not the first.
So can I mispronounce your handle? Like, I'm sorry. So, Happy Sheeple3 asked the question about, like, what can you do? And I got sort of a similar question from Rower, R-O-W-R, like, what can we do? And so I need to go back because it was NASAA.org. NASAA.org.
Okay. Yeah.
Right? They put together that panel discussion in Washington where, I was
Overstock case is what you're referring to here?
The Overstock, but also NYSE was there, and they had to admit, some of the things that they did on the proxy side. So the NASAA.org, they have a button right at the top of their homepage that says contact your state securities administrator, right? So they're the people who are most interested in the complaints that you have about, corporate governance and, what's happening to the companies in the state where you are, right? So I did want to mention that. And then just on the voting itself, what do you do? Like you said, right now, GME is in proxy season. And there's a story about
sounds like you said NASA,
about
but
their proxy, what happened at their annual meeting when they got more votes in. And they knew for a fact that members of Patrick's family did not receive their proxies, so were unable to vote, right? There's a guy by the name of, there's a website called inspectors-of-election.com.
We'll link this stuff down below. Yeah.
And you can, the company has to do this, the investor doesn't do this. The company hires an inspector of elections, someone like Carl Hagberg, for example, who will actually go in and try to figure out, like, if in my view, and this is Carl Hagberg's view as well, and he's much more experienced on that side of the business than I am.
Okay.
If you're an issuer and you get more votes in than you have shares outstanding, you should not accept those election results. You need to stop and get this thing.
Thank you.
This
the
will
fuck?
help reveal evidence if there is naked shorting, if there are fails to deliver, whatever's going on, it can be revealed. Like, there are a few things that bubble up. There's a lot about fails to deliver and naked short selling that you will never find in public information, right? And even
intentionally, I'm arguing intentionally.
Yes. Yeah. And even the issuers have a hard time finding out exactly what's going on with their own stock, right? This is a long-term problem. But there are a few things that bubble up, and one of them is during the annual meeting when it comes to voting. Now, after we raised this issue in 2005, there were Broadridge, who processes a lot of this electronically, offered a service to the brokers. They can pay so that if they report more shares to be voted than they have held at DTC, then Broadridge will tell them to fix it before they tell the issuer. And that's probably how we got 15% of the overvotes down, right? So we went from 100% of the test cases to only 85% of the test cases, because Broadridge will, so DTC says, of the million shares held by CD & Co., 100,000 are Goldman, 100,000 are Merrill, et cetera.
Right.
And then Broadridge goes to Goldman and says, you have 100,000 shares, who do we send the voting material to? And they send back 200,000 or 150,000 shares. Broadridge will tell them, I'm sorry, but you only have 100,000, you need to fix this. Well, that means that in Goldman's system, they had, and I don't know this is Goldman, I'm just speaking on them because they're a big name, in their system somewhere, they actually had retail investors in their accounts more.
All right, guys, I'll be honest. I'm starting to get a little bit bored because I feel like maybe 4 or 5 times they've actually repeated the same information. I think I enjoyed the information, really, really good information, but I feel like they're losing sight of solving the problem, right? Like, they just want to end it at pitchforks. If your only answer is violence, then you got no fucking answer. If fucking DFV doubling down for a total of $30 million of GME stock isn't going to bring more investors in, you guys think this AMA is going to? I don't know, my people.
In their account that they had more shares than actually existed.
GameStop is bouncing between 100 and 200% for the past couple of months. Institutional ownership.
Yeah, so that's a really important point, and the institutions are also really get up in arms about this. So the proxy voting charade, Bob Drummond, 2005, Bloomberg Markets Magazine, he's got a lot of details in there to help anybody that wants to understand that issue in more detail.
And you do a great job, too, of talking about all of this stuff in your book, which has, by the way, you have a huge demand for an Audible book right now, too. So I mean, we can talk a little bit more about that offline, but...
Well, I will say, I do want to let you know, I talked with the publisher, and he's in London, so he's in contact with the Royal National Institute for the Blind, and that's not an Audible, right? I mean, it's not an audiobook for commercial purposes, but we are trying to make it available for people who are sight impaired.
There you go. You heard it first. So got that in the works. That's incredible. That is excellent. Would you mind if we went ahead and transitioned? We're doing good on time. I think we're probably running maybe about 5 minutes behind, but let's go ahead and jump into looking at the evidence. So we're trying to lay out the groundwork of what's happened here. We've got these shares that have been rehypothecated to oblivion. We have the DTC that is not really really doing a whole lot to kind of, or any sort of agency that's in charge, it looks like they're more incentivized to keep the problem going, and we're trying to blow the lid off of that. But looking at the evidence going forward, I'm going to be writing a lot of the stuff that we're talking about here in the House of Cards too. And so you mentioned a bunch of stuff in the book about some of these numbers that I'd like to go over just high level, and we can kind of discuss what the implications of some of those might be. So right there up at the top, I've got more than a third of companies receive up to 25% more votes than they have shares outstanding. That's on page 55 of your book. That's that direct evidence of what we're talking about here. And now, to really want to drill into the FTDs, because that's where we're getting to the money with this, is the open positions due to NSCC. These are quotes from your book. 3.4 billion. Just round it up there. Or round it out there. 3.4 billion open positions due to the NSCC. Open positions due by participants with the NSCC was 2.45 billion. That results in open total fails of 5.8 billion. I believe this was a 2005.
2000 and yeah, something like that.
2005 or 2007 or something. And from that, I pulled the same report, 2019 and 2020. 2020's total, and they've thrown this euphemism on there now. It is no longer fails. It is open positions with enrollees, or what does they say? They refer to these as open positions for which a trade guarantee is applied.
Right.
Okay. So
and the only time a trade guarantee applies is when there's a fail.
Yeah.
Otherwise, it's not. It's just due next
It's
week
just-
or next month.
Yeah.
Yeah. So.
would you be surprised to know that your $5 billion figure in 2005, basically pre-financial crisis of 08, has turned into a $183 billion figure?
Wow.
Right. Not really.
Okay.
But
My
part
Tesla's
of it is
printing,
there are
baby!
issues, being traded.
My
and,
Tesla!
There are, what should I say? Like there's more types of issues. So since 2005, 2006, NSCC has added, ETFs, mutual funds. They've got some bonds running through there. So there's more activity, more numbers, etc. That's certainly true. But that's why when you use those figures in House of Cards or everything short, I always encourage people to put a denominator on there.
Make the distinction, yes.
Right, so it's a multiple of something, it's a fraction of something. So when I look at
What is the multiple?
for open positions, I go back to I want to go look at the clearing fund, because
Yes.
So what's that? So basically, he said 5 billion and then 180 billion. So that's like a 19x multiplier. But she's saying we got to take a number that compares them appropriately with the common denominator, and then it will lower that 19x to.
that $183 billion doesn't show up. It's the clearing fund that NSCC would draw on to cover that. Right?
Which is?
So that's for me, that's the denominator. Like, is that a multiple or a fraction? In the 03 or 4 or 5, there were 40 times, like the fails were 40 times the clearing fund. So that if most fails really failed, there was no way to cover.
Over. It's game over.
What about now?
A little bit more too about some of these DTC proposals.
What about now? I hate that they don't fucking answer the
Really want to pick
questions.
your brain on those. And that jumped from 183 or to 183 billion. It was up 40 billion alone from 2019. And then to your point about the clearing funds, we're going to get into kind of the nitty gritty here about the clearing funds. But another point you illustrated was keeping the ratio.
Why not in the same conversation?
Traded on the NYSE, and then as a comparison showing what's that figure here? We have a volume increase for a period between 99 and 2002 to 2003 to 2006. So 3 years to 3 years, volume of total trades increased by about 29%. For the same time frame, the same comparison, a 95% jump in failure to deliver.
So I never met a number I didn't like.
Okay.
I'll be a little more mathy with you. So the thing was yes. So when reporters or whatever would go to DTCC and say, hey, why is the value of fails gone from 6 billion to 183 billion? We do more trades. Trade values are rising. But as a percentage of all transactions processed, is still a very small, less than a fraction of 1%. But what I'm looking at is what's that change across time. So if one is increasing much, what
I'm looking at is individual company. Over a wide spectrum, their shorting thing may not be a noticeable effect. But if you go individual company, you're going to go find 50 companies that they've totally destroyed.
Trade volume is the deal.
I mean, I think Adabit just said 7,500 companies have gone out of business, or potentially 7,500 of the businesses that have gone out of business were due to this naked shorting BS and that their inability to raise money off their stock.
More trades, and so sales are going up. Then the trade volume should somehow parallel, should be correlated somehow. And as a numbers person, I look at that and I go, just not. Like, it's just not there. Mm-hmm.
It's not. To the point that you just brought up about that clearing fund, I mean, if people have been reading and following my posts, and your book talked about failures to deliver jumping like 1,000%, or not 1,000, but 100%. I also noticed these liabilities, these assets going up. Citadel was somebody hard not to ignore in my first post about Citadel has no close. I don't think that you actually reviewed that, but the point I'm trying to make is that asset side in their short, or the liability side of their short positions has jumped 100%. The assets are actually held by the DTC that are supposed to be used to cover those. And then also looking at the clearing fund balance from the NSCC, we have another 100% jump. So 2019, we had clearing fund balance of just under 4 billion, and the 2020 clearing fund balance is just under 13 billion. That was 2015 being just under 4, and then in 2020, so 5 years later, and there was a 119% jump in just 2019 to 2020 alone. So you talk about that amount that's being held to cover these shorts, and they say, well, we'll have less failures if we just have a bigger deposit account.
Well, there's a relationship between the two now, right? So in the leading up to the 2008 financial crisis, I made points in several places that what we just talked about, that the clearing fund was a fraction of the fails, right? That the risk in the system that was building up in the system was enormous. That there was, because that's, now they have too big to fail status, blah, blah, blah. Okay, so after that.
No pre-card, right?
Right, so probably in, I've forgotten the year, like I said, so probably 2009, 2010, something like that. Prior to that, there was no calculation for the clearing fund that included fails. So it was based on activity. The more trades you did, the bigger your end of day settlement, the more you had to put into your fund. That's how the participants all put in different amounts based on what their activity is.
Right.
But the fails were not calculated in there until after financial crisis. And then finally, at that point, it was that was included in there. So as the fails rise, now that clearing fund should be going up with it and coming down with it. I think it's still short. I don't think it's definitely not bigger than the fails. Let's put it that way. Although it's not as far apart. But again, you have to look at this across time. Like, what are the changes? And then the one thing that really, as I read House of Cards and everything short, you're looking at notes to financial statements. That's where all the good stuff is, right? Yeah. That's where if you want information about those NSCC fails, that's where it is.
One sentence can change your entire interpretation of what you just read in the previous page.
Right, exactly. And then the other thing is that DTCC and all of its subsidiaries are self-regulatory organizations, which means that they are regulated by the Securities and Exchange Commission, and therefore all of their rule changes, price increases, everything that they do has to be submitted to the SEC, subject to public review, open for comment. I haven't worked at DTC since 1993. And the way I keep my knowledge updated is by watching their rule changes and watching. I look at their financial statements; they have continued to put less and less of what you really want in there. And that reminds me of that old Paul Simon song, make a new plan, Stan. As soon as you shine a light on.
You guys remember how she said the $5 billion to the $180 billion isn't a fair number because you can't see, like, the FTDs don't match in the volume. But do you also remember that the FTDs only are responded if they electronically mark it as a borrowed share? And do you also remember how she said there's no idea to how many borrowed shares are out there that weren't marked as a borrowed share? Does everyone remember all of those things together? Does everyone understand when you put all of those things together, she's either never put all of those thoughts together to just kind of like the interpretation of what she believes right now doesn't line up to me. Seems like she's like holding back. I feel like she's holding back.
Something that you see that's not right, the cockroaches run from the kitchen, right?
Right.
So you talk about rehypothecate. The problem is really resubmit, reprice. Right, and each time a fail occurs, it gets resubmitted for the next day's settlement, as opposed to being called out. Right, called out. And if it were called out, then you could start to really see those numbers come down.
Oh, thank you for the insight on that. And I know we are getting a pretty close warning here. Still,
like she almost made it sound like don't expect as big of a market crash as you got back in 2008, because by the denominator effect, it's not nearly as bad. But she also told us that they're lying about the FTDs on a regular basis. So why would she even say that?
Spent so much time. I appreciate all the time you've spent. I want to jump into the recent proposals with the DTC. We can spend just a couple of minutes covering this and kind of what your implications are. So the 003 filing is telling them instead of doing this monthly reconciliation, we are going to do this daily reconciliation to make sure that you're not getting too out of hand, right? So give me some thoughts on that.
That's kind of a minor technical point, because every participant receives a statement, their settlement statement. They get an early one, and then they get a final one. They get a position report. I say report because I'm old school. They used to actually print paper.
Right. Yeah.
Now they go online. There's a terminal. And they, in their, when they become members of DTC, they agree that they are responsible every day for letting DTC know or NSCC know if there's something off. Right? If something that NSCC and DTC thinks is in their account or shows in their account is not what they think it should be, they have, and it used to be like 3 days to get back. So, but once a month or once a quarter, they would have them actually physically sign the paper and send it in and say, yes, we really looked at it, right? But to say it went from quarterly to monthly to daily is sort of a technical correction, because in fact they were always responsible for always making sure that was right. Yeah.
Okay. Well, what about the 801 ruling saying, if we find out that your fund's not as up to date as it needs to be, we can require you to update that deposit within 1 hour?
Right. So I think that's and someone on the AMA asked a question about, is the Reddit making a difference? Are the GME followers, are you making a difference? I think that this is clear evidence that it is.
So my issue with all this is that the shorting is a mathematical formula in relation to your bank account, and it, like, the way that everyone talks about shorting, it doesn't really vibe with me mathematically, as far as like the T2, the T21, like the how much time you got to pay and how soon you get margin called. Like, I've already experienced all those different types of things 2 years ago. When I had the $500,000, I made every physical possible trade to experience. I got a portfolio margin account. I was basically an individual that had the same rights as a hedge fund, and the math is very simple. So we might spend a day going over that, like the shorting of a so I've tried to show you options. I can show you another way of looking at options. I'll do that, and then I'll show you if we're just shorting stock and we weren't doing it through options, but we're doing it through borrowed fake shares.
So when you're really calling attention to a problem, and then you start to see rule changes coming out from the DTCC and its subsidiaries, that's an indication that in fact it had an impact. That they are starting to look at this and say, you know what, maybe we need to check this, this fails balance more often, because once a month wasn't enough. We should do this every day, because look, look at the GameStop, not only the dollar value, but also.
And the point I have about the shorting is the amount of money that it takes to short a stock, naked short a stock. I'm willing to bet that 90 to 99% of the shorting comes from institutional buyers, and like Citadel, Melvin, etc. It's all club money. It's all the big institutional club money holding us down, people.
The number of shares, right, exploded. Their risk can rapidly grow very quickly. The other thing is that one other thing I want to mention is CSDR. It's the Central Securities Depository Regulations that are going in Europe. If you look at Euroclear.com, for example, just type, search for CSD regulation. You'll find all the information on this. This was supposed to go in 2019. No, 2019. Then they delayed it to 2020. Then the pandemic hit. It was 2021. Now it's 2022. Okay, so it's pushed back. But what it basically is, you may not fail. If you fail, it's mandatory that the buyer can go into the market, get the shares, replace what you failed to deliver, and charge you the difference.
Which is what the rule removed was back in the day, where they removed that buy-in rule, that mandatory buy-in rule within the U.S., correct?
Well, it's always just been voluntary in the U.S.
Oh, good to know. Okay.
There are some circumstances where it's mandatory, but it's basically voluntary. But they're going to make it mandatory because if the buy-in fails, the depository will reverse the trade. That's putting pressure on all the DTCC members in all categories, because if they have to comply in Europe, they pretty much have to comply here too.
Yeah, it's hard to maintain two separate books there.
Right.
Okay.
So they're going to be watching this much more closely. There's so much more going on, and look, I'm just so.
That sounded like positive news. If someone's looking for a catalyst, try to research a date on when they think that's going to happen. Like, when do they make a full transition, all their books playing by the same rules? And it sounds like the Europe rule is a positive thing. Does everyone agree with that?
Grateful for the encouragement that I've received from the Super Stock people. I mean, it's just been, it's what keeps me going when I hear you say that about the outcomes, because the what can we do next is always hard, because it's very specific. And if it's not just one thing that can be fixed that's going to create, the brand new world. There are lots of things that need to be changed. And each time you call attention to one problem, the dark pools arise, right? So there's always the phantom that tries to hide it away, right? So I would be, look, we can talk about doing another AMA.
I was actually I was gonna ask you. It's a really good transition in. I know we could kind of go through some solutions, but honestly, if we have some opportunity to do this again, look, I wanted to kind of wrap up my end of this by saying, I'm sorry that you never were able to get this to this level, but now we have 250,000 people that are starting to beg and demand answers, and that pitchfork army that you wanted so desperately is here. And my question to you is, would you be open to working, at your time and being able to, review different posts that might be submitted to you? We can work on the House of Cards too, and really start to get this stuff ironed out and get the people the tools that they need in order to get this stuff pushed in and get this taken care of.
Yeah, and Spunky too has a way to send docs to me and point me to the DDs and the God level.
Due diligence. Yep.
Yeah, due diligence deep dive. I am trying learning. Yes, I'm definitely beginning to read hieroglyphics, and it's sort of like just going on the site and finding things out. It's a bit confusing, but anyway, yes, I'm happy to do that as time allows. And also, there's a lot of information in the Naked Short Reading. Thank you for mentioning that. But the other book, Lessons Not Learned, also.
I have that too.
London.
I'm looking forward to reading that one.
So that one has that's for the techies, right? If you're a technical analyst, if you want to look at laws, rules, regs, the history of how many times have we, bailed out banks and brokers.
Yeah.
Right. So all of that's in there, but the Naked Short Reading is a narrative. So I wanted to write it and establish more storytelling. And so if you want to do that deeper dive, the other book would be helpful to people. But
I'm gonna keep you open. I'm gonna be in contact with you.
Yeah, I'm happy to do that. Yeah.
And by the way, FYI, you've officially been dubbed the Jane Goodall of the Ape Troop now. So thank you very much for
someone called me Queen Kong of the Apes.
Queen Kong, get used to it. You're gonna have a lot of names like that. So Dr. T, thank you again so much. I mean, wow, we just blew through that. There's a lot of info in an hour. I appreciate your time, and
That's why the book is so good.
That's what it was. So I appreciate you so much. Thank you very much. And thank you, everyone, for tuning in. Look forward to the follow-up coming out. Just shouldn't be too long. And
nice. She's in Tucson?
Thanks, you too.
Thank you. Bye-bye.
Very cool. Yeah, I mean, hopefully she just, like, they had a... Like, hopefully, like, I mean, I feel like a lot of people just don't know how to, like, if you could win tomorrow, you'd win tomorrow, right? If you had all the answers, then, that, like, you wouldn't be, like, fighting the good fight. So she obviously doesn't know everything, but she knows way more than anyone else that I know. Like, she seems like a genius. Like, she seems someone with a real experience and someone that didn't like what she saw, stepped out so that she could maintain her integrity and be able to talk openly about anything that she believes, just like me, right? Like, when I went to Trey and then they say, come work with me, like, I guarantee I got to sign some contract, and they would have given me some bullcrap money, and it all would have been to, like, now I'm not allowed to say certain things, but the fact that she's worked for the DTC and she's able to open her mouth still is quite amazing. And I like it. I like it. I'm impressed. Thank you guys for forcing me to watch this and review it. I feel like there's a lot of information in here that will come in value later. If there's no further questions, I'm going to go get that boxing channel set up and figure out exactly if I'm boxing tomorrow and what time and all that good stuff. Any questions? Any questions? Any questions? Thank you for that $20, Don Rana. Thank you. Thank you. That was amazing. I will be here as much as I can. I was so tired this morning. I got like 7 hours of sleep. I woke up early, 5:30 or whatever. Came in, started streaming, and then when I turned it off, I went and talked to my girl, and I just ended up falling asleep till like 11 o'clock. I was so tired. This lady can't just come out here. Put people on blast, and she drops some word gems and fairy tales. A-Rod says the lady can't just go out and put people on blast. She drops a lot of gems in a very intelligent way. I agree. She gave me a lot of stuff that I learned from and I could take and I could increase my knowledge. So it was a very good thing. Terry Kaid says the whales should recruit you like the FBI does with the best hackers in the country. You're right, but the problem is they want to buy me. They're not willing to work with me. They want to own me, and I don't do that, and they know it. They know it. Ashley, I liked the video and subscribed. Get off my back. I only own 10 contracts right now for AMC, and it's on the $24 strike for June 4th expiration. If they hit and they print, I'm going to cash them out and buy stock until the $50 strike hits. Or $40 strike hits. And then once the $40 strike hits, I'm going to cash out whatever profits I want. But as soon as anybody that's invested in any of the things I've ever talked about, that's when I sell out. That's when I feel comfortable to sell out of my stocks. Because if you didn't cash out after it hit 40, you're doing something that I don't even know about. And that's up to you, big buddy. I trust in you. Alright, guys. Well, I will catch you on the flip side.